Hello, welcome to Founders Marketing Compass. My name is Etgar Shpivak. With my experience as a co founder and as a marketer, I'm interviewing founders and investors to learn how to build healthy, lasting relationships between startup founders and their marketing teams. Today, I'm with Dor Eligula, the CEO and co founder of Bridgewise. Hi, Dor, how are you?
I'm good, good. How are you?
Thank you so much for taking the time to interview in this podcast. Before we will start, happy to hear a bit about you and about your journey at Breedwise.
Sure. So first, thank you again for the opportunity. It's a real pleasure to be here. So a bit about myself and the journey. I'm Dor Eligula, one of the co-founders of Bridgewise. I'm 29 years old, already second timer with my fellow co-founder. So it's our second startup together. We started together 9 years ago, and here we are. So the vast majority of my professional life is with the same team in the same field of FinTech entrepreneurship, and it's been nothing but great up until now, and hopefully it will keep on going like that, gets better and better. About the journey, so again, as mentioned, I've started the entrepreneurship vector when I was 22, right after I graduated my master in law from Bar-Ilan University, of course, all in parallel to my duties as an IDF soldier. And then we started our first company together called Index, where we used to price diamonds algorithmically in order to solve or break the wall of the diamonds industry into the financial industry. And we have managed to do it very successfully. And then after we sold that company, and we all sat together and thought for a couple of months on what we should do now, because we like to work together and we know that we have been successful. So why changing something that is not broken? And we started the Bridgewise, which is our current startup or company now. And of course, the scale of Bridgewise is bigger compared to the previous one, and it has been nothing again but a blessing. Of course, we are all leveraging our experience and knowledge in the relevant fields. Myself on the business and marketing side, Gabi on the innovation and of course business side, or my co-founder and my twin brother is on the operational side, on the legal compliance finance, and more on the product side. So again, a pleasure to be here, and that's a glimpse to my journey up until now.
So we will start with the question that I think every marketer is trying to understand from the founders that you work with, and is how do you define your marketing team's KPI? And moreover, right now you grow and like you're already over 4 years in this business. How did you see those KPI evolve through the different stage of your startup?
Of course, it's a billion or $100 billion question, because so much marketing budgets, so big of budgets are being decided based on these KPIs. So it's a very big question. But I think, especially on startups, it's an ever evolving answer. Because the answer that I'm answering now was not an answer that I would have given you 2 years or 3 years ago. And I'm not sure it will be the same answer 2 years from now. So coming back to the question, I'll answer on the past and the present. On the future, I'm not a prophet yet. On the past, and especially, of course, based on the profile of the company, we are a B2B enterprise software company. We, of course, are specializing in the fintech and capital markets fields. So it's a very unique industry in a way. It's a very high touch, face to face oriented industry where it's less of an online sales, traditional SaaS process. Or again, in our case, it's more relationship based, high touch, as mentioned. So, of course, it depends on the profile of the organization. Generally speaking, the big weight on our sales organization or growth organization is business development, again, or relationship based sales. ABM, it can be named in many different ways. So in our case, the KPIs are mostly driven by supporting the sales team, of course, with the most basic KPIs like opening the relevant opportunities in the target markets, of course, defining what are the target markets, etc. But also more specific KPIs like specific deals that we want to close. So, of course, working hand in hand with the relevant sales team or team members, and or doing some specific activities in order to just close a deal that is already in the pipeline or generate the opportunity with the relevant 2 or 3 names. Because again, as mentioned, we are an enterprise SaaS company, so we know the names of our clients or our prospects. And so just targeting them is not an easy task, and get their attention is not an easy task. Coming back to the question, how do we define the KPIs? Is we look, of course, at the growth targets of the upcoming year, and then we break it down to what steps we need to do both on the sales side and, of course, on the marketing side, and how those work together in order to achieve the goals. So it's first setting up the target and then going back to understand what kind of specific steps we need to take in order to potentially achieve those goals.
Can you share with us an example, like in your early days, like what were like the KPI of you work with your marketing team? Hey, you did a good job. Hey, we need to work on this. And what are they today? If we take this to comparison.
Sure. So I'll give you an example. 2 years ago, we have already knew that we are about to reach 100% market share in Israel. And we are now indeed 100% market share in Israel. And we knew that, again, in order to keep on growing in the same pace, we need to grow to other markets. So we had a big project led by the marketing team. We called it Project Where To, meaning, by definition, which markets we are targeting as next after we had the product market fit proof here in Israel and some minor proof in other markets. We needed to grow the business and grow that proof to the potential investors of the next round. That's usually how it goes. So we have made, again, a big project in that wanted that the project aim was to define what's the target market, what the next ones. So we had some research and we found some very interesting, not obvious results. For example, one of the results was that one of the most promising potentially markets for us was Japan. And it was surprising because what was the last time you heard about Japan being one of the first target markets for an Israeli startup? Not a lot.
I definitely agree with you. I know it's normally common the B or C stage of companies try to work on this market, which is, I know, a fantastic market, but extremely hard
to penetrate. Yeah, indeed. But again, all of the numbers, all of the data criteria that we have placed in the beginning of the project, we're just saying go for Japan. Or go for Japan at least as one of the top 3 countries to go after.
Can you give an example of some of those data points that pointed out to Japan?
Yes. For example, as we all know, Japan is getting older in terms of the population. So there is a big generational wealth shift, or at least coming wealth shift. Second, there has been a big revolution in the participation of the retail investors in the market. It was called the NISA revolution. The NISA is a new saving, like a savings account, an independent savings account that is exempted from a capital gains tax. So there is more incentive for the retail investors to participate in the market. And third, for example, it was the low interest rates in Japan compared to the growing interest rates back then in the more developed markets. So it was, again, all 3 and some more data points led us to understand there is a real opportunity for us in that market. Because, again, there is never right and wrong. But according to the criteria we have placed in the research, those were the relevant data points. So if you believe that what you have set in the beginning is the right criteria, you need to follow it. But the interesting part was, again, we have showed it to our board and to some potential investors. Luckily, it was not an actual investor of ours, not then and not now. And one of them really, again, half mocked us, saying, okay, you can do some research, but never seen a successful startup doing it in Japan. So we said, listen, this is the data, this is the research, we believe in it, let's go for it. And now I can happily say that we have made it in Japan. We are about to make it in Japan. Already 2 of the, let's say, largest organizations in Japan are clients of ours. And the Japanese Stock Exchange and Rakuten Securities, 2 giant organizations in Japan, which, again, were not the obvious clients for us to go after, especially in a, relatively speaking, early stage of a startup. So it was not a bet, but a gamble we had to make, a while, of course, an educated one. But again, it was all thanks to our amazing marketing team who made some very thorough research. And we believed in them. And here we see the results. Of course, the sales team has executed very well since then, but it couldn't happen without the marketing team thorough work, not only in the execution of the plan, but actually doing some good research.
You talk about executing, and happy to follow up on this question because I know that for many founders going and building trust, which is eventually, I think, the most important factor that you need to do as an early stage company, and not to go into this trap of no one get fired because of buying IBM or the market leader. Can you give some examples of what did your marketing team and your team did to gain this very, very hard trust to build for those two giants that you just mentioned, the Japanese stock exchange and Rakuten? How did you actually implement it? Like, what were the actions behind those KPI of go and build trust in this new market?
So I think it's a combination. I think marketing, like I'll go a step back with your permission. Marketing teams cannot do everything, especially in the startup phase or in the early stage of startups. They cannot, and you don't want them to do everything because it will not work. And you can expect, but again, you should be worried of what you expect for, because again, they cannot do everything. So very early, we have decided that again, the marketing team will be supporting the research and of course the execution of the sales process. Why the sales process? Because especially as mentioned in the high touch kind of business, there is very big importance of us people that are involved in the sales process. So it was more like the trust that you have mentioned rightfully was built by us, the salespeople, but it was also built through some activities that the marketing team has helped us with. For example, we have made some, I think it was 2 or 3 dinners that was specifically focused for executives in the Japanese market. And these dinners are usually very intimate. So you can, it was not an event of 100 to 200 people, but, 10 people tops. And then by having 10 people around the table, enjoying, eating, drinking together, you can understand that the other side is here for a process and not just to close the deal and walk away. So this is, for example, an activity that helped us both from the sales process, of course, budget, because it was the marketing budget, but also understanding what's the real need of that specific deal. Because we could have done some big campaign, either digitally or in traditional media channels, but that specific media channel of meeting face to face and sitting together for 3-4 hours was the most useful. And I know that especially in KPIs and marketing, you always speak about the ROI and time to ROI. So the highest ROI, of course, when again, respectively, it's not a big expense to have a dinner, was an amazing move that we have done together, where we identified the need, planned on what's the most budget and ROI efficient move to make or step to take, and execute.
I think this is a great lesson for founders. And I will also add that from my personal perspective, what you said in the beginning, following regulation and especially regulative changes is one of the biggest growth engines that I think you can have, especially as a young founder. And I want to continue this discussion. You talk a lot about your sales team and your marketing team. And I know that in many startups, there is a lot of tension between those two divisions because it's always needs to work. And I have seen so many times that when something doesn't work, because it's really easy to say, hey, yes, we close the deal and everyone happy. But sometimes stuff doesn't work. And then I'm seeing like the marketing team pointed to the sales team, hey, you don't know how to close the leads. And the sales team pointing out, you're giving me not qualified lead, or you didn't warm them, you didn't bring this the right approach for my lead. How do you, as the founder, as the CEO, that have to manage both of those sides, manage this?
So I think the answer, again, there is no clear answer. Otherwise, it would be a one Torah that everyone would follow. But I think the answer for us is alignment of interest. And how do you get alignment of interest is, in our opinion, compensation. If everyone is being compensated by, of course, besides the base, but everyone's bonus and everyone extra compensation or compensation package is built based on the same vector, it will help the alignment of interest to happen. Because as you mentioned, we don't want the marketing teams or the sales teams to give excuses or good reasons of why they were not the problem. We don't want problem, we want results. And if the results were not as expected, we want the team to work together in order to solve that problems or issues and get the results done. Again, as mentioned, it's compensation in our opinion, because that's what drives people. Of course, the success and everything. But if you put everyone's target in the same direction, it will benefit the alignment of interest. I can tell you in our the KPIs of the marketing team are not necessarily opportunities, because if you do not provide good opportunities or valuable opportunities, so it's a waste of resources. So we are all aligned in terms of the vector we are following in terms of actual bookings or actual deals closed or dollar, like actual revenue closed. So that's how everyone in the growth team, that's why we call it also one team. There is no marketing team and sales team. There is one growth team. Of course, there are marketing associated people and our sales, but they are working together as one department, shoulder to shoulder. And again, their KPIs are the same. That's a way to minimize the quote unquote tension. Again, there is no right and wrong, but that's our way to do it.
So we're talking about their compensation, and let's go like one step back.
Mhm.
And I will ask, what are the top three qualities that you look for when you hiring your marketing leadership or marketing roles?
Wow, that's a big question. So my immediate answer would be if they are business oriented. I believe a lot of founders, especially in the early stages, know a lot of marketing people that know how to market themselves and not the business. And that's a big problem because they also create a bad name for marketing people in early stage. So you need to identify those who just know how to market themselves and know how to sell themselves, and or those that will actually go and dive into your issues as entrepreneur, your problems, and solve it with you. Because a lot of the founders, a lot of the entrepreneurs are not marketing experts. Let's put it straight. We are either business oriented, very like sales, etc., or tech oriented. Marketing is a big black hole for most entrepreneurs. And again, marketing people know how to brand themselves. So there is a big problem. So you need to identify. So one of the qualities will be actual experience, but not only on paper. But I can tell you the best marketing teams I've worked with, or the best marketing people I've worked with, are ones that has been on the sales side, because they know the pain of the sales people on the day to day, and not just speak about the big KPIs that are very fluffy most of the times of the marketing side. So that's one. Two, I like it's not a per se quality of the person, but I like, and it's generally speaking not about marketing. I like the friend reference. Like if I have a strong reference from someone I really trust, either that works for us or I know from any other association or connection. That's, in my opinion, the strongest reference or quality I can have. Because when you hire someone, you take some gamble on them. Even if you have a long hiring process that takes weeks and home tasks, you cannot really know of how this person is really working on the day after the contract is signed or the onboarding is done. And it's a big risk, onboarding someone, putting resources, time on them. So the second thing is strong reference from a friend. And the third, again, so business, strong reference from a friend. And third is people that ask me questions about our business and want to really understand how the process goes, and do not come and say, listen, this is how it should work, that like as if they know better. Not like coming from the theory to practice is most of the times very challenging. So those who wants to understand what's the practice right now in the business side and wants to understand what can they fix or what can they enhance. So these are the three things I would immediately.
So you said that you like to distinguish between people who are great at marketing themselves to people who are great on actually doing marketing. And this is something that came actually very repetitively on this podcast.
Mhm.
And happy to understand your how. Like someone sit with you, a great marketer, you heard very good stuff about him, he came with a reference. Do you have any tips for the founders that want exactly that, to avoid hiring this very expensive marketer who's doing great job for himself but not necessarily for the company? Do you have any questions or anything in the communication process that you can point out?
Sure. My immediate answer would be asking them about their failures. By asking someone about his or their failures, like, why did you leave the last job? Or, like, having their CV in your hand, you can ask about not the positive things that has happened in each one of these, past experiences of theirs, because those are clearly part of the CV. Or if they are not part of the CV, that person is definitely not a marketing guy. So this is one. And ask them about their failures. If their failures are mostly being thrown at third parties, you know that that person, again, it's never 100% like that. Yeah, but my immediate understanding would be, okay, he'll come here, he'll have the same excuses. But if someone says, listen, like, for example, here I failed in, because no one is perfect. Even Elon Musk is sometimes failing. So if you can learn from his failures, because everyone fails, and say, okay, this is my observation after failing in those places, or what will I do better in here, especially given your founder experience about your company, and you know what specific fields you want them to excel in. That's what was, again, one question. Or we could of course always follow up on these questions and understand and dive into these specific failures. You can understand the real character of the someone that is in front of you. Usually, again, I don't like to work with, or I like to work more with people that came from organizations in the same size and experience, because usually the ex Meta, ex Google, they have a lot of glam, but on the real struggle of a startup, it's way different. Budgets, room for mistakes. When you make a mistake in Google, okay, it's such a big of a machine, can make mistakes, but the tolerance for excellence in startups is way smaller.
Or to make the mistake faster?
Yes. Okay.
So,
Like long processes. Again, these are two things I would usually identify as either positive or negative things. But again, there is never right or wrong.
so we talk about mistakes, and happy to hear about it. Can be yours or it can be other that you have seen if you don't want to expose them. If you can give me one mistake that you commonly see that founders doing when working with the marketing team.
Wow. I think a lot of founders, and we have made that mistake as well, think that they know better because they are the founders. The title doesn't grant a lot of wisdom by definition. So I can tell you, in Bridgewise, we have, again, that's another mistake we have done and we fixed it. Now we have the best marketing people that I know, and I've seen a lot. Okay, with the right experience, with the right attitude, with the right character, everything that, whatever it takes. So that's one. But two, once you work with them, you need to listen. You need to say, okay, you are the experts, because you're like the founders are definitely not better in marketing. Otherwise, you shouldn't hire these people. I want them to be better than me. I don't want to be the most brilliant guy in the room. Never. So we have them as the most brilliant guys in their fields. So of course, understand their needs, understand their budget and needs, and give them the tools in order to achieve their KPIs. Of course, you cannot just let it go, because you have some budget and you have some resources in management, but help them understand how you can help them, because again, they are the ones that needs to execute. You need, as the management, you need to understand their needs and trust them. Otherwise, if they'll not deliver, you know that you have given them the best opportunity to deliver. So if you trust them all the way, give them the tools, and let them execute and deliver.
So I'm sure that a lot of marketers would enjoy those questions. And now for the last three questions that I ask every founder. And this is like general speaking for your feelings as a founder of a startup, is what a common misconception about running a startup you would like to debunk?
That's a big question.
רגע, אני רושם שנייה, אני מסמן רגע לעצמי גם בערך איפה הקאטים. שנייה אחת, 31. cut. What a common misconception about running a startup you would like to debunk?
It's a big question because I guess I'm not fully aware of the misconceptions. Otherwise, I would have fixed those. But I think a big misconception is that the founders or the founding team needs to control everything and know everything. I think that's not right. Again, I don't know if it's a misconception, but I have faced some investors and other founders that wanted their founding team to control everything. I don't think a founding team can or should control everything. Again, I can tell you in Bridgewise, both the marketing and technology, like the CTO and chief marketing officer of ours, are not part of the founding team, but their leadership or their contribution to our leadership has been nothing but crucial to our success. We are four founders, and still the CTO and chief marketing officer are two very, very, very experienced and like executives that bring us a lot of value in their, not only of course their professional ideas and leadership, but also their management skills to us, and also their character, of course. So again, you cannot control everything, and you cannot centralize everything in your hands. Either if you're one, two, three, or four founders or more, you cannot centralize everything. Trust your management and bring strong management. Don't save money on your management. That's a big mistake startups do. In order to save part of the budget, the management team is everything you have.
So, what would it be if you could give yourself one piece of advice before you started the startup?
Besides buying Bitcoin, I guess.
So, what would be the second one?
Yeah, a lot of Bitcoins.
Buy more Bitcoin.
Yeah, more, always more. So to my entrepreneur, not my investor, to me as an entrepreneur is invest more in the people earlier. So more and earlier. Again, a lot of entrepreneurs, when they fundraise their first round, they say, okay, let me save as much as possible in order to get some more runway, etc. But that actually takes more money than hiring the best. Like, don't settle for nothing but the best, because the manpower is the number one expense of yours. Besides, like on the expense, generally speaking, do not settle for nothing but the best. And I can tell you, we have made that shift 2.5 years ago. And since then, you can see the velocity of the company. The scale that we are, or the scale up that we're having since that decision has been nothing but amazing. And I think that's one of the crucial points that made us so far so good, successful. That's the number one tip I would give any entrepreneur.
And for the
Bring
last
less
question,
people, but best quality.
so go for a team hiring, if we will call it like in the US terms.
Yes.
Hire only a team.
Only people that are better than you.
By the way, I always like this approach of, if I can't learn from you and you can't give me value, then I probably don't need to hire you.
Exactly. I totally agree.
And for the last question, and I know that what you're doing is like so wide, is which question did I need to ask, but I didn't?
So I think a question I've been asked like 2 weeks ago by a friend of mine, that a very good question, doesn't really specifically for marketing, but for entrepreneurship in general. He asked me, what's the number one tip you can give a fellow entrepreneur? And it took me some, let's say, 1 or 2 minutes to actually digest the question, because usually I'm not a person that looks into himself very, very much, because I'm busy with doing and not with just observing myself. So it took me 2 minutes, and then I gave him an answer that I think is, of course, again, I don't want to sound too cocky, but a brilliant answer. The answer was, find that piece of motivation that can make you do irrational stuff. Just to give you some background, this year I became a father. I'm now a father to a 1-year-old, adorable daughter. In that year, I was flying, I think I had like 8 flights to Japan. It's like 15 hours flight per direction, so it's like only like around half a month only in the air. Okay, it's not a rational decision to make, but the thrive for success, okay, and the potential growth of the company, of course, and proving to that investor who half mocked us that we can be successful in Japan, made me and made us take this again irrational decisions or steps, because being a tech entrepreneur is not a rational move. Only 5% of the companies statistically are successful. You put your best years in it, your best time, etc. Of course, the reward if you are successful is very big, but it's not a rational move to make. So find that specific piece of motivation that makes you go through irrational steps in the path and just build it upon this piece of motivation.
I just loved it. And Dor, I want to tell you, thank you so much for taking the time in this interview.
Sure.